Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking in on SPY XLK, the tech sector, and XLF, the financial sector. So the bulls buying the dip yet again, a lower open. We opened fairly weak, but look at the bulls extremely strong. Look at what this pattern is, where we have our strong close, we have our dip, bulls buying the dip. The next day we have a gap, or not a gap down open, but an open down near the low of the day. Bulls buy that, and then we saw a gap up open to start the week, and this is pretty much a very similar pattern. Look at the last candlestick from Thursday, and then this Thursday, Friday, and then this Friday. Open at the low, close at the high, and if it were the same pattern, we would see a gap up open and an all-time high on Monday. Not saying that's what's going to happen, but Thursday and Friday, last week and this week, pretty much the same, increasing bull volume. And if you saw the run-up at the end of the day on SPY, and let's look at that real quick, absolutely huge bull move and really trapping a ton of bears. Look at that move to the upside. The last 45 minutes of trading was just a big middle finger to all the bears and closing extremely strong. So we'll see if we get that follow through heading into next week. Certainly momentum favoring the bulls, and the weekly time frame shows that. No bearish reversal candlestick, strong close, and on the verge of new all-time highs. XLK saw the same lower open. You can see the Thursday and Friday candlesticks pretty much the same. Bulls closing right at the high, and we continue to see higher highs each day. We have now seen higher highs on XLK. Not going to count right now, but looks like a dozen plus times. And we're at 52.65. Did hit a new high here, and if we break that level, we closed right at that level, looking like we will break that level on Monday. So looking for continuation for the bulls. Same thing with the weekly time frame, extremely strong. We're above the upper Bollinger Band on the weekly in breakout mode, and no slowing down the tech sector. And the tech sector was the driving force at the end of the day behind the S&P 500. You can see that breakout was very similar. And you look at XLF, and XLF was off. XLF was down about 1% at times on Friday, where we had the S&P 500 down only 0.2%. So we are seeing some sector rotation, in my opinion, because for the correlation that I've been watching in all of 2017, if you told me the financial sector was down 1%, I would tell you that the S&P 500 would be down at least 0.5%. And that was not the case. So that means something else is propping up the S&P 500. We know the tech sector is still strong, and XLF is still strong. But again, the notable difference on Friday with that weakness, but the S&P 500 holding up. So key support on XLF is going to be 24.25. We formed a higher low at 24.31. And we're looking up at the recent highs. 24.68 and 24.67 are our little double top up at those levels. Weekly time frame is a bearish reversal candlestick after a breakout. We'll see if we consolidate again next week. A break of 24.31, the low of last week, would indicate further consolidation coming. And at this point, it would be normal and healthy, as after a breakout, normal and healthy consolidation certainly welcomed by bulls, as it usually can lead to continuation if it is in a nice, healthy, contained manner. So we are looking very strong heading into next week, looking for new all-time highs, not fighting this trend, waiting for clear bearish signals to be looking in the other direction for the consolidation that we know is coming, but it's not here yet. So I appreciate you watching. We'll check back in on Monday. Have a great weekend.